Assalamualaikum. My name is Nur ABT2043 and my matric number is A19A0627. The introduction of financial institution is an institution engaged in the business of dealing with several types of financial and monetary transaction. It is include investment, loan deposit and also current exchange. It is divided into two categories, which is Islamic financial institution and also conventional financial institution. The difference of both financial institution are for conventional, the value of asset usually calculated based on data performance and so on, while for Islamic financial they do not see cash as a trade and commodities component, and the relationship in conventional is only relationship between depositors and investors, while in Islamic financial there is a form of joint venture, partnering, buyer seller and so on. And the last one are risk taking. For conventional they do not express the related investment risk, meanwhile for Islamic financial they build an agreement for risk sharing.
Assalamualaikum and hi. First of all, I want to introduce myself. My name is Nur Asma Natasha binti Cik Ibrahim. My matric number is A19A0533. I will continue with my part is about roles of financial system. Firstly is money supply regulation is the role of financial institution such as central bank to help regulate the money supply in the economy. The second role of financial institutions is banking services, such as commercial banks which assist their customer by providing saving and saving services. The third is insurance services, where financial institutions such as insurance companies help mobilize and investment in productive activities. So that's all from me. Thank you.
So I will continue function of financial institution. The third point is capital formation. The fourth is investment advice. And the fifth of role financial institution is brokerage service.
Next, the seventh role of the financial institution is the pension fund service. Financial institutions, through their various types of investment plans, assist individuals in planning their retirement. One such investment option is a pension fund, where the individual contributes to an investment group established by an employer, bank, or other organization and earns a lump sum or monthly income upon retirement. Afterward, trust fund services. Some financial organizations provide trust fund services to their clients. They manage the client's assets, invest them in the best option available on the market, and take care of their security as well.
The ninth point is financing is small medium-scale companies. Lastly, the role of financial institution is to act as a government agent for economic growth. Thank you.
Hi, my name is Azrul Iskandar bin Zainuddin. My matrix number is A19A0081. Today I want to talk about the issue involved in the article. The first issue involved is financial institutions need high standards of corporate governance as they are interested with others people's money. Islamic financial institutions need to consider several issues specific to their business model. Decision on profit distribution require the careful balancing of the interests of multiple stakeholder groups. The second issue involved in which is the sensational growth of the industry in recent years combined with high levels of liquidity has meant Islamic banks have not needed to fight for funding or ideas. Newer entrants to the industry have merely attended copy the strategies they see being successfully pursued by their skilled rivals. That's all. Thank you.
The third issue is Islamic money market yield that move in since with conventional rate simply means user of an interbank money market IIM face an equivalent extent of the rate of interest risk that conventional players do. It is the ironical that despite creating a new market, an institution that are alleged to enable interest-free operation, players end up with the maximum amount rate of interest exposure, if not more. This unfortunately is that the reality of IIMS operating within a dual banking system and Islamic financial system operating within a bigger conventional macro environment cannot completely sterilize itself from rate of interest risk.
Another issue involved in financial institution, Islamic institution issuing IIMM instrument will face higher cost if conventional interest rates rise, while investor of HMM instrument instrument will get lower return if the order happen. The third transmission channel arises from central bank intervention. No matter what, the intervention may be a routine open market operation to influence liquidity or execution of latest monetary policy. The central bank action within the IIM must reflect its action within the conventional money market, failing with profitable arbitrage against the central bank or a carry trade between the market will both be feasible. Given this, regardless of how supportive a central bank is of the Islamic financial sector, it cannot possibly maintain during no cost change in one market and not within the other. That's all from me.
The fifth issue involved is Islamic finance is sorely lacking on product breadth, depth, and sophistication. There are still only few risk hedging instruments and techniques in Islamic finance despite its rapid growth. A few risk management techniques are not available due to requirement for Sharia compliance. Hence, the development of prudential regulation and system related to risk management, capital adequacy, and corporate governance of Islamic banking is even more pertinent. The sixth is financial engineering is another operational issue faced by Islamic banks, which demands standardization of the process of introducing new product in the market. An Islamic bank currently has its own Sharia board examining and evaluating each new product without having coordinated effort with other banks. This process should be streamlined and standardized to minimize time, effort, cost, and confusion.
Lastly, Islamic banks may have higher operational risk, greater number of contract, newer supporting system involving skill set, and lack of consistency of best practice. Islamic banking is perceived to be more exposed to operational risk associated with the failure of control, producers, information technology systems, and analytical models. Operational risk goes beyond the mathematical models and capital adequacy, which is a cultural change in the organization regarding operational risk is needed in order to develop sound operational risk management practice. That's all from me. Thank you.